Well, good morning, Southern Oregon, and welcome back to the Real Estate Show. We're so happy to welcome you to our very first episode of 2025. Welcome back. And to kick things off this year, we have Guy Giles of Mutual Mortgage coming on the show, and he's bringing with him Chris Ritchey of Guild Mortgage, who does the financing for the affordable home subdivision called New Spirit Village in Southwest Medford. Chris Ritchey of Guild Mortgage is going to be talking to us about what that subdivision looks like and how people can qualify for the affordable homes there, and what the program is like with Guild Mortgage. Chris Ritchey is coming to speak with us, and also Guy Giles of Mutual Mortgage, who will be talking about the market in general. And also we might ask them about predictions for 2024, even though we've got a show dedicated to that coming up, but we might hit them up for that. In the meantime, let's check in with all three counties for our market statistics ending the 2024 season on December 30th. Jackson County prices year over year were down 6% in the residential market. The average home costing $482,419 in Jackson County residential. The number of sold year over year were up 100% this week in Jackson County. They had 32 closings on SOMLS this week. Number of listings year over year in Jackson County were neutral. We had 631 active listings on SOMLS this week, normally a quiet week for Southern Oregon. Let's check in with Josephine County now. Prices year over year in Josephine County this week were up 11%. The average residential home this week costing $462,389. Number of sold year over year were up 12% in Josephine County. There were 9 closings on SOMLS in Josephine County this week. Number of listings year over year were up 15% in Josephine County residential this week. There were 336 active listings in Josephine County. Klamath County prices were down 37% this week. The average residential home in Klamath County costing $248,549 this week. Numbers sold year over year in Klamath County were down 41% this week. There were only 7 closings on SOMLS in Klamath County's residential market. The number of listings were up 22% this week in Klamath County. There were 281 active listings on Klamath County. So you can see that our listing inventory is up fairly consistently every week for several months now. So that's something to pay attention to, folks. The prices are still up and down. There's still some volatility. Some of that is seasonal because Southern Oregon is a seasonal market normally. But this winter has been more active than usual. So that tells us that the market is changing even as we speak. So let's bring in Guy Giles of Mutual Mortgage to talk to us about the market changes and what's coming up in 2024. And he's bringing along with him Chris Ritchey of Guild Mortgage to talk to us about the affordable housing program in Southwest Medford. Well, welcome, Guy Giles and Chris Ritchey. So glad to have you on our first show 2025. Welcome.
Happy New Year.
Yeah, Happy New Year. We're glad to be back. So ready to go.
Ready to go.
Yeah.
All righty. So let's just take a minute, Guy. Can you give us a few impressions of 2024 now that it's officially behind us?
Man, well, I think for a lot of people, just everybody, we're glad to have the election behind us. That was kind of coming up for a long time, and then it finally got done. So at least things are settled, and maybe we can get back into at least a routine. It was a tough year for us. We really thought that rates would come down last year. Gosh, I remember it was a little over a year ago that actually it was 2 years ago when those 3-2-1 buy downs started coming out, and I can honestly sit right here now and say that I never sold one, so I'm super thrilled about that. Not even one. So my people aren't at 8.5%. I was still selling 5.5 when that thing went out.
And why were the buy downs a bad idea now looking back?
Well, looking back, it's easy to say they were a bad idea, but back
Oh,
then,
am I overstating?
well, yeah, I mean, everybody thought rates would go down. I mean, there's nobody that didn't believe that they would go down. I actually lost a few. I wasn't even planning on going here with this, but I was just thinking about it right as we were starting out. I for some reason I just had a weird taste in my mouth about them, and I had a couple of agents that kind of fired me over it, to be honest, because they really wanted me to sell those things. And I wouldn't not sell one because I thought rates were going down too. But I
Uh-huh.
was more of a proponent of using the money that they were going to buy down with and just buying down their rate. So we bought the rates, and I did look back after the rates didn't go back a little while ago. And the people that had adjusted into the eights, at that same time, I was, well, they were all locked in around 5.5% to 6%. So that won't bode well for me on refinances anytime soon, but that's all right. I'd rather lose a buck or two. But so it was weird. We were really thinking that everything would break loose. I think everybody in the country was thinking that. And this has just been a lot more stubborn. Government spent a lot more money than they should have, and rates are a lot higher than. Anyway, I would have liked to have just got the bleeding done back then and over with, but they don't let me write policy, and I'd
Well,
probably.
and the Federal Reserve was not very good about being correct during the last 18 months.
No.
We were just all over the board being in reaction mode. Chris Ritchey from Guild Mortgage, I'll ask you the same question. What are your impressions of 2024 now that it's officially behind you?
I'd probably just echo what Guy said. I'm, glad it was over. It was a good year. Could have been better, but it could have been worse too. So, it was definitely interesting in seeing how sticky rates were, especially towards the end of the summer when they started dropping. And I was like, all right, here we go. Finally, it's what we've been waiting for. And then the climb back up in October and September.
Yeah, that was
Was
so
a ton of fun.
disappointing. Yeah, yeah, yeah. And it's hard to explain to people.
Well, it, it,
Hmm.
it is, especially on our side, because we really do try to look ahead. And, but I know both of us invest money in different places to find out and try to get, really, really smart people and have access to the mortgage-backed securities and things that a lot of the little banks and things like that don't invest in. I'm sure their capital markets people do, but on the ground, he's another one that really spends a lot of time trying to anticipate what's going to happen, and it makes it difficult because we take it personal. We want to give people a good rate. I mean, that's the ones that are happy across the desk, and it is difficult when you can't read anything at all, and that's kind of how this last year and a half has felt. But um, at least houses are still going up. So, the people that did buy that maybe didn't get the rate that they wanted at that time, there will still be a chance for them to refinance. But at the same time, they didn't miss out on all the appreciation that's happened so far.
Hmm.
Yeah. So how likely is it that we're going to look back in 12 or 24 months to this 23, 24 window and say, oh my gosh, everybody who bought during that time, smartest person in the world. How likely is that going to be the reaction a year or two from now?
It, I honestly think that it's we're always going to look back and say that there was not a bad time. I mean, I think it's been twice in the last 80 years or something that things have actually gone down. And it took a
Wow.
major crash like '06 the last time.
Mm-hmm.
So, they may not accelerate as fast, but in the long run, you look back, there's not enough housing, even though the new administration really wants to open up a bunch of new building. It's not going to happen tomorrow. And even if they are able to do it, 4 years from now, everything could change as far as the direction of, how many houses we're going to build. There's just a finite amount, and it's very difficult for builders, especially in these climates where they don't know what they're going to be paying for their money, to go out on a limb and really invest a lot into new subdivisions. So unless you really have your heart set on a small apartment and a cat, I think just hit it and buy a house.
And the cat's iffy in this market. unless you're
Yeah.
unless you're buying. So Chris Ritchey from Guild Mortgage, how were you able to explain to people the uncertainty of the Federal Reserve and how it may or may not affect actual mortgages.
It's a challenge. I know Guy can relate to this, especially in September, right? Rates have been going down, and then there was people that, that had been shopping during the July, August timeframe and saw rates go down. And then we're hearing in the media the Fed's lowering rates more. And then when mortgage rates went up, it was a lot of education just explaining how, what the Fed controls is the overnight funds rate. They don't
Right.
really control mortgage rates unless they're buying a bunch of them. And so it was a lot of education with each client to help them understand. And the funny thing is, if you look historically through pretty much every rate cycle that we've gone through, when the Fed starts cutting rates, mortgages actually go up because
Oh, that's common.
Yes, yeah, very common. Typically, the 10-year Treasury will spike and mortgage rates will spike when the Fed starts cutting rates because investors will look at that as maybe the Fed's going to avoid a recession, and so they pile back into stocks. And typically, from when the Fed starts cutting rates to when we reach the actual bottom of mortgage rates for that cycle, it takes about 3 years. So we've got some time ahead of us for sure.
And he kind of touched on one thing that they can, there's one lever, whether or not they'll ever pull it, that they can do, and that's the buying of the mortgage-backed securities. And he did kind of mention that. That's probably something that we would need to use for the next, segment we could get into a little bit, just because I know we only have about 30 or 40 seconds left in this one, and I don't want to get caught mid-thought. but the Fed, like I said, a lot of times even, we will get a little bit of a spike. We're always anticipating that that's going to happen, and so anyway, sometimes our rates have come down a little bit. Sometimes they end up going up. It's been a weird market, honestly.
And we'll end on that note. We're gonna have to take a quick break. Don't change that dial. We'll be right back. Well, welcome back, Southern Oregon, to the Real Estate Show. Gosh, we're so glad to have you back on our first show of the 2025 year. So exciting. And we're lucky to have Guy Giles from Mutual Mortgage. And today he's brought along with him Chris Ritchey, Senior Loan Officer from Guild Mortgage, who's going to talk to us a little bit about a special program happening in Medford, the only one in the nation. But before we get to that, let's wrap up what we were talking about before the break. So, gentlemen, we were talking about how hard it was to explain to our clients when the Federal Reserve Bank lowered the rates and then the mortgage rates went up. Can one of you please reiterate why that happens? What a phenomenon.
You can finish that thought.
So there can be a lot of different factors, but a big part of what happened back in September was unemployment had been rising for quite a while in 23 and 24. And we started to see that jump over the summer, which coincided with rates coming down, because typically the unemployment rate going up means we're either in a recession or we're headed for a recession. And in September, then we had the Fed raising rates, which makes investors think they're going to avoid a recession. And then on top of that, we also had the unemployment rate go back down. And then we were getting all sorts of, we'll say,
anomalies?
Concerning, or maybe some, I don't know the right word to use. We were getting a lot of data from places like the BLS and other government agencies as far as job creations and stuff that didn't really coincide with what a lot of people are actually feeling. And so there was a lot of data coming out that was showing that, hey, maybe the economy was doing a lot better. The Fed was going to achieve their soft landing. And so investors, then don't think it's as risky to buy stocks. And so they pile back into stocks, and then interest rates rise as a result.
And then what he's talking about is something we touched on, for a couple shows in a row, where all of a sudden in September, the biggest job growth was 18 to 29-year-olds. And it's like, 16 to 19-year-olds. Mm-hmm. So it's like, wait, they're going back to school in September. Why in the world are all of the job growth from them? And are those even living wage jobs? So there has been a lot of the numbers that have felt to us, I'm not going to bullshit anyway. Honestly, it has not been really honest with a lot of the numbers that have come out. And there's no way other than that to say it. But like you said, then people figure, well, I can make a fast buck in the stock market. So then they start piling their money back into there, thinking that everything's okay. And it really just has to do with long-term and short-term investing. the one thing that the Fed has actually, on top of what they've done that's actually hurt us is they've sold off a lot of the mortgage-backed securities that they had in their portfolio from the last crash. And if they would just kind of slow down their selling off to that or start buying a little bit of those, that could be an instant thing that could help home loan rates. And we'll just have to see. I'm not saying that personally, I would rather just let them not even have the ability to meddle in some things. But
Yes, that would be great.
the markets would be great. Whether or not we can ever get back to that, I have no idea. But where we are is, houses are still going up, 3.9% or 3.6% case Schiller. It was a little over 4% last year with the FHFA. And the distinction between them is one of them will do like everything together, and the FHFA, which is what most of us live in, is the conforming loan limits that are this year $806,000, believe it or not, $806,500. But they're just tracking those. So the one that the case Schiller that the Fed looks at a little bit more doesn't, it's more of a broader thing. They include cash sales, they include what we call the jumbo market, bigger than Freddie Mac are able to do. So I wouldn't even say it's skewed, but it's a different measurement than what the average person will be looking at for appreciation on their house. So even 3.6 is not a bad thing. Not as high as we've been seeing for a long time. But at the same time, and I know right now we're probably seeing actually reductions as far as like house prices going down a little bit right now. They say they're 0.3 year over year, but I don't know. You could probably speak to that. You do more CMAs than I do on actual houses. But the Fed could jump in, but really I think we should probably talk. There's one really good thing happening around the community, and that is what Chris is able to loan on, which is this new land trust that might help some people get into a house that may otherwise not be able to. So
yeah, this is very exciting. I've been tracking the new Spirit Village for several years, back when they were going to do the 3D construction, and we did a couple of shows on that. But you're here and to tell us that you can do loans on the units on New Spirit Village, and let's hear some history, Chris, since you're the one who's got all the info.
Yeah, we're one of the lending partners for the New Spirit Village, and it utilizes what's called a community land trust model. And
a lot of people don't know what that is.
Yeah, it's unique. Even when I first learned about it, and I don't know, probably similar to Guy, I kind of consider myself a nerd when it comes to all things mortgage, but this was brand new to me when I first started working with Proud Ground, which is the nonprofit that's helping get New Spirit Village off the ground about a year and a half ago. And there's a couple of things that are unique to the community land trust model. So the first one, and kind of the overarching, I guess, theme of it is you can kind of think of it similar to a mobile home park where you own the home, but not the ground that it sits on.
But they're stick built. Is that right?
Yes, but they are stick built. So
that's great.
Is each person that buys one has a 99-year lease on the land that their home sits on, and that does a couple of things. So one, it drastically lowers the property taxes because they don't get taxed on the land value.
Right. Okay.
And then the other one is Fannie Mae has a kind of special carve out in their guidelines where the difference between what the home appraises for and what they're buying it for counts as their down payment. And so
you don't even need a down payment?
No, they're awesome. And so to put some numbers kind of into context, we have a client right now buying one of the 3-bedroom New Spirit Village units, and they're buying it for $235,000, and it appraised at $309,000 and some change. So that, almost $75,000 difference counts as the down payment. And so they got a grant from Access for closing costs. So they're basically buying a brand new house for $500. And the other cool part is because of that large down payment, there's no mortgage insurance. And so between reducing the property taxes by not having the land being included, by having that huge down payment, no mortgage insurance, and the reduced sales price, it really, really helps drive down the monthly payment.
So that's amazing. I don't know where to start, but let me start with some numbers. So how much did that 3-bedroom at New Spirit cost?
Well, they're buying it for $235.
235. And then what did it appraise for?
We'll round up to 310. It was like 309 and some change.
Okay, so that's $75,000 difference.
Mm-hmm. Yeah.
Wow.
Yeah. Now, there's some other quirks with these. These are designed to be affordable housing forever. And so the resale value on the homes gets capped to make sure that they remain affordable housing. So that person that's buying that house for $235 that appraised for $310, they can't move in and then turn around and sell it for $310 and make that $75.
No flipping.
No.
Yeah. Do you have to hold it for a while?
Nope.
Yeah. Do you have to live there for a while? Does it have to be owner occupied?
It does, yes.
Okay. And I'm sorry, should I just be quiet and let you talk?
No, these are good questions because you'll probably ask.
This is all very interesting. Okay. So we're talking about New Spirit Village. It's a development from a group called Proud Ground. And we're speaking with Chris Ritchey, who's a senior loan officer from Guild Mortgage, along with Guy Giles of Mutual Mortgage. And this is just fascinating. And this has been in the works for quite some time. Is that correct?
Yes, it was spearheaded by Barry and Kathy Thalden, who are big supporters of the Rogue Valley. And after the Alameda fires, they wanted to help get a lot of those people that lost homes back into homes and into safe homes. And so that was kind of the original intent behind the 3D printed homes, but that, had its own unique challenges. And so they partnered with Access and Proud Ground. Barry and Kathy Thalden and partnered with Access and Proud Ground to help kind of facilitate the development of the neighborhood itself, and then also to identify fire survivors that maybe could qualify for some state assistance to further drive down the monthly payment, and really, just try to provide some more affordable homeownership options.
Wow. Well, this is a very interesting model. And we only have a few seconds before we have to go to a break. Is this common? Is this a common model?
So Proud Ground's been doing it in Oregon and Washington for quite some time, but this is the first time they've done a whole subdivision like this.
Uh-huh.
This is actually the largest one in the nation. So it's kind of
wow. Okay. Well, when we get back from a break from our sponsors, we will talk more about the New Spirit Village by Proud Ground Development with Chris Ritchey and Guy Giles. Do not touch that dial, folks. We've got lots of good info coming. Well, hey, Southern Oregon, welcome back to the Real Estate Show. I'm Alice Lema. I'm a broker here in beautiful Southern Oregon with John L. Scott Real Estate and the host of your show. And just a quick reminder that this episode with Guy Giles of Mutual Mortgage and Chris Ritchey with Guild Mortgage will be repeated tomorrow, Sunday at 8 a.m. So you can hear all this great information. We're talking about the market. We're talking about 2024. We're talking about the new affordable development in Medford called New Spirit Village, which Chris Ritchey of Guild Mortgage can do financing on. So not only is it affordable housing, but it's financeable, right, Chris?
Yeah. So some of the funding for the project, which is partially responsible for the low, the reduced sales price, came from the state of Oregon. And so the loan programs have to also go through the state of Oregon. It uses the OHCS, either First Home or Next Step program. And it offers typically below market interest rates. And then they also have some down payment assistance options. If typically you're not going to use a down payment assistance for this type of home, but in general, they do have other options too.
I do have a question though. So if somebody was, bought there, they intend to live there, they're there 2 years, and then they move their job or whatever. How do they get out of the house? How
do they sell it?
Yeah, so I was just wondering what it looks like at that point.
And can they have a realtor?
So it's a little interesting on that side. So when someone wants to sell one of these homes, Proud Ground will actually buy it back from them, and then Proud Ground
That actually makes sense.
because that's what's going to facilitate the or ensuring that they remain affordable housing. And so how it essentially works is when they go to sell it, they'll have an appraisal done. And let's just use that 310 house to make it easy. So let's say 3 years down the road, they want to move and they go to sell it to Proud Ground and it appraises at 350. Now, as the seller, they can get 25% of that appreciation gain. So 25% of 40 is $10,000. So they'd get $10,000 in when they sell the house back to Proud Ground. And then they also, though, get the difference between, what they bought it for and what they owe on it. So they get the, appreciation or the amortization gain from making their monthly mortgage payments, like the principal that they've paid towards the house. They get back at closing. And then if they did receive grant funds and that kind of stuff to put towards the down payment, they'd, get that back and in proceeds from selling too.
So, but they didn't put that down payment usually anyway. So they're actually getting 25% of something that they didn't contribute to initially. Mm-hmm. So that's actually not a bad.
Yeah, but that's a lot of moving parts.
But
yes, and Proud Ground has both Proud Ground and Access. Homebuyers will go work with both of them during the process. Have a lot of education because it is kind of a unique thing. And so as part of the application process, they'll do a counseling session with Proud Ground where all of this is explained and they can ask questions. They'll also have, they offer attorneys that will pro bono explain the contracts and how the lease works and educate them as well. And so there's really a lot of education. And yeah, these aren't designed necessarily for someone that wants to make $400,000 in equity over the next 10 years. They're more designed to be affordable housing and provide just an easier way to get into a home, less money out of pocket, and at a payment that people can actually swing these days.
So I'm sorry, but if they're buying it back, then a real estate agent isn't involved. But is a real estate involved with the initial purchase?
Yes, yeah. So buyers choose their own real estate agent to use when they go buy one of these, and that's something that Proud Ground will let them know. Hey, you need.
Yeah, so they have representation, which is
yes,
good.
Yes, yeah. For sure. And Proud Ground still requires home inspections, even though they're brand new. And
actually, that's a good idea.
Yes, I'm a big fan of that in general, but a lot of people think they don't need them on new construction, which I don't.
No, you do.
It's
maybe
more important.
Maybe, yeah.
But they've done, Proud Ground's really easy to work with, and they have a lot of great people over there, and they're actually working with another developer to do what's called Breath of Life, which is going to be similar to New Spirit Village, except it's going to be kind of more townhomes and condos instead of detached single family homes.
And is that in Medford as well?
That one will be, yes. Oh.
Okay, so let's talk about locations. Where is the current New Spirit Village? Like what part of Medford?
So if it's off of Lozier, just past Sherm's Thunderbird, over kind of in Southwest Medford.
Okay, well, that's where a lot of our free land is. Not free, but available.
Yes, yep, exactly. And it's right next to Lewis Park in Southwest Medford. And so the development when it gets finished anyways, because the part between where they're at now and the park is still under development, but it'll connect all the way through there. And so you have access to a great park. The community is designed to be very walkable. If you haven't checked it out, go to Proud Ground's website, which I believe is just proudground.org, and look at the pictures. The homes are beautiful. All the streets are like stamped concrete. It kind of reminds me of Disneyland, to be honest. Even though they're affordable, they're really nice.
Yeah. So how big are they?
So they range from, I believe, 800 to 1,100 square feet.
Oh, okay. So they're on the smaller side. The cottages.
Yes.
Yeah, but that's nice.
Yeah. They do also, they're built, to be energy efficient. They even, they include all of the appliances, so even washer and dryer, which is unique for new construction.
Yeah, that is unique. So refrigerator, washer and dryer included.
Yep.
Great, great. And what size lot are we talking about? Do you
They
know?
are, I mean, they're not zero lot line, but they are small.
Uh-huh.
And so they are fairly close together. They do, though, have small fenced off backyards. There's white vinyl fencing between the properties and then around the development too when it's done.
Uh-huh. Uh-huh. So so are they, but you said one of them's a 3-bedroom. Are they 2 bathrooms, 3-bedroom, 2 bath?
So they have 1 bedroom, 1 bath, 2 bedroom, 1 bath, 2 bedroom, 2 bath, and then 3 bedroom, 2 bath.
Okay.
Yep.
Okay. So that would be the 1100 would
Mhm.
be 3-bedroom, 2 bath.
Yep.
Wow, that's great. So what kind of are there income limitations that you have to have? I'm assuming not just anybody can go and buy one of these. Is that correct?
Yes, there are, and the kind of rough income limits are on Proud Ground's website.
Mm-hmm.
There are some, but the income limits vary based on family size. So the larger the family, the more income you can earn and still qualify. But for more, I'd say detailed questions on that, I would circle people to Proud Ground because Guy knows this. A lot of times,
Right.
how we calculate income on the lending side is a lot different than how maybe normal people would consider their income, or how Proud Ground or Access are gonna.
Mm-hmm. But that's very common in Oregon. They have a specific way of counting income, and it's by number of people in your household. That's super common.
Yep.
Yeah, but that's not at all how the real estate world, outside of Oregon works. Yeah, yeah. So, how many units are we talking about here in New Spirit Village?
There's going to be a total of 87, I believe, is still the plan. And so far, if memory serves correctly, there are 14 now completed with certificate of occupancy.
Are they really? So, are they sold?
Um, I know we've closed one, and then we've got 2 more personally at Guild that I'm working with in the process. I'm not sure. I think there's a total of it's either 4 or 5 lending partners for New Spirit Village. So I don't know what other
What they're
ones
doing.
are currently under contract. But there's definitely ones available, and they're getting started on building the rest of them.
Yeah. Wow. So, can you take a tour?
Yeah, yeah, they do have open houses regularly. You can also, go check them out with your realtor, of course. And the first step is really just going on Proud Ground's website and doing the application. You'll send in some paperwork and do an orientation, and then get started on like the pre-approval and working with Access.
Yeah. So, who did the construction? Do you know?
Outlier was the general contractor.
Oh, because they were going to be the general contractor for the 3D
Mhm.
construction. And
Yep.
just so people know what we're talking about, the 3D house building material is like akin to a concrete slurry,
Mhm.
sort of. Yeah. So
Yeah.
when we say 3D houses, that's kind of what we're talking about. So, but these are frame construction.
Yeah, they're utilizing uh, Pacific Wall Systems
Oh,
panel.
they are.
And so Pacific Wall Systems is based out of Talent, and they've primarily done commercial over the years, like hotels,
Yeah.
apartment complexes,
But that's like a prefab modular, right?
ish. Because yeah, instead of it being framed on site, they essentially frame it
Yeah.
in the warehouse and then take
Yeah.
the pre-built wall, but it's not like a mobile home.
Yeah. So I hate to cut you off. We have to take a break because I have to say thank you to our sponsors. We're going to talk more with Chris Ritchey of Guild Mortgage about New Spirit Village, and Guy Giles of Mutual Mortgage, just general market and all the exciting things in Southern Oregon. Well, welcome back everybody to the Real Estate Show. We're talking to Guy Giles of Mutual Mortgage and Chris Ritchey of Guild Mortgage. And we want to say a special thank you to our ongoing sponsors, Guy Giles of Mutual Mortgage. We so appreciate your support bringing this show to the airwaves every week. And also special thank you to John L. Scott, Ashland and Medford, and also the local Rogue Valley Association of Realtors. We couldn't do this without you guys. We love you and thank you. Thank you so much. So getting back to New Spirit Village, Chris. We have lots and lots of questions, and we were just finishing up in the last segment about how big they are
Yeah.
and the size of the lots.
Guy, for our YouTube viewers, Guy can share the Proud Ground website real quick. So, and I was right, it is proudground.org. And so this will show what the model homes that have been completed look
Oh,
like.
they're cute. So if you go to the YouTube, you'll be able to see these. They are darling. They have little front porches.
Yeah, or a
And
big front porch with the one. That's even the cheapest one.
Yeah.
yeah.
And I
And
was
if you're
wrong.
not
I guess the one is 626 square feet. So the one's a little smaller than I thought.
okay, but if you go to rent something in Old East Medford or Old Central Point, this is a lot of what you get, but it's older. So
Mhm.
this is that style, that 2 bedroom, 1 bath, 1 bedroom, 1 bath, but
Yeah.
you would own it. Oh, and they've named them. The 1 bedroom, 1 bath is called Hummingbird.
Yeah.
That's so cute. So they have
Outlier
one,
did a great job. They're really nice.
yeah, and they have double pane windows. Do they have central heat and air?
They have mini splits.
Mini splits. Okay, so that's heat and air though.
Mhm. Yep.
Okay. All right. So, and then for those who don't know what mini splits are, they're the big white things that are mounted up on the top of the wall by the ceiling, and they are remote control. They're very energy efficient. They're very quiet, and they don't have ductwork.
Yep.
No,
Yeah.
they're actually nice. I put them in at the River House, and I don't get to enjoy it because I don't live out there, but it looks like it's really cool.
And then they have stackable washer and dryer,
Yeah.
electric stove. So the building guidelines in Oregon now are all electric for new construction. Is that correct?
That I don't know off the top of my head, actually. Do you?
Uh, no, actually, I building codes. I don't. I'm still watching that thing scroll, so I took it down. But honestly, I was actually they're really nice little houses.
Yeah, they're
was
cute. They're
surprised.
cute. But I see what you say about the mobile home park model
Mm.
layout. It's they're kind of long and skinny,
Mhm.
like yeah. But and we were talking about how they're not made on site. They're not made the way a manufactured mobile home is made, but uh they're made in a warehouse. Is that what you were saying?
Yeah. Pacific Wall Systems has a factory in Southern Oregon, and so yeah, they build a lot of the framing off-site, and then bring it to the site, put the walls up, and then the trusses and everything for the roof are done on site. So it's kind of like a hybrid almost, yeah, between a completely modular and then like a common, like a normal stick frame.
Well, but it's nice that they're done locally, because some of the builders that are here now building are not local, and they're bringing out of town people and out of town supplies.
Yeah,
And out of town quality.
I know.
Yeah. We won't name names.
That was a
So,
big one here in town, and when they got here, that's how they promoted everything. Was it was all local. It was all local people until it wasn't. So this is
yeah.
kind of nice. I didn't realize that they were building those wall systems right here, and right here.
Yeah.
Yeah, that's pretty exciting. Because our local labor force needs good jobs, because good jobs are why people can buy houses, right?
Yeah, exactly. Funny how that goes hand in hand.
It does. It does. So, Guy, what do you think's going to happen in 2024? I know you were not ready for this
I can
question.
tell you exactly what's going to happen in 2024.
I
I said that.
And we're going to do another show on predictions, but just in the last few minutes, do you want to take a bite of that apple?
Well, honestly, just gonna keep just stay the course. I mean, I really do believe with everything in me that it is a good thing to buy a house. So that if we can position you to buy one, whether you're a doctor or whether you are, just starting out, in construction, there's a process that goes into this whole thing. So our job is mainly to educate people, hopefully put them in the same position. And that's the reason I have Chris, and Gil on the program. It's kind of weird for a lender to have another lender on there, but I believe in what they do, and they're good quality people over at Guild, and they will do the same thing that I do for people, which is sit down with them and try to get to what's going to be the best, the best course of action. And like I said, it doesn't always have to be just a person or the family that's got 3 jobs struggling to do it. I recently had a doctor that we paid off a lot of debt, and he's buying, a pretty expensive house, but a lot of it is with not structuring. It's a terrible word in my business, but just kind of helping people just make the right moves and do the right things to be able to get into a house the right way. And if we can just help educate people, that's pretty much the plan. Is just do what we've been doing, and there will be a lot of happy people at the end of the year that they bought a house.
Yeah, you can't go wrong in Southern Oregon. So Chris Ritchey, what do you think is going to happen in 2024? And again, folks, we didn't prepare either of these guys for this question, because we do have a predictions episode coming later in the month. But yeah, Chris, what do you think?
I would honestly just kind of expect something similar to what we've seen over the last couple of years. I don't expect anything super crazy, but I don't know, life I feel like always has a way of surprising us.
Yeah.
So, but like I said, it's like buying, stock or putting money in your 401k. The best time to do it was yesterday, the second best time.
That's right.
And, like he said, with the Case-Shiller appreciation, 3.6%, that's lower than, what we have seen in some years recently.
But there was some. That was the thing we
Yes.
didn't know this time last year, right?
Yeah. So home prices are still going up. They continue to get more expensive. And, to the education point, especially when it comes to first-time home buyers, I kind of feel like I'll typically use kind of a metaphor of buying your first house it's like you're at the train station, and buying your first house is hopping on the train, okay? And once the train starts moving, if you're on the train, you can hop up cars, right? It's easy to jump forward on cars when you're moving with the train. But the longer you wait, the faster that train's going and the harder it is to jump on. And so, the house you buy today may not be your dream home, but it's better than throwing away all of your money renting. So.
Yeah. And it's interesting that the younger folks are having a harder time. And I don't know that they realize that it is the economy that's causing a lot of that, because a lot of us older people, we always knew we were going to own a home one way or the other. But what are your thoughts on just the general availability of that lifestyle to folks that are just coming up on the younger side?
It's definitely tough. I think we've seen wages not keep pace with the cost of life. And, house prices went up a lot during COVID because of low interest rates and the extreme demand that was going on. And then coming out of COVID, interest rates went up. And so you have expensive homes, high interest rates, and people's wages just haven't kept up. And so it's tough. It's
the trifecta of terror of home buyers. Yeah.
And if you figured, as much money that goes into just building a house these days with all the compliance pieces, all the permitting, if that can get a little bit under control, some people are trying to do that these days, and we'll see how well that works out. But if we can get rid of some of the compliance piece of this thing and get it back, then that might actually help, along with freeing up a little bit more land to build.
Mm-hmm.
Well, the new administration has a real estate guy at the helm. so we'll see.
Yeah, we will see. But I'm almost thinking that I'll just predict really high rates for this next year. Since I've been wrong for a little while, to be wrong, I might as well, just kind of reverse the whole thing on
I like that.
So.
I like that.
Oh man, I do really believe that the rates will ease a little bit. A lot of it's we have a federal deficit that really needs to be addressed, and if it's a little bit painful for a little while longer while that happens, I think it's going to be better for the children and grandchildren. So let's hope we get some fiscal responsibility, and let's quit manipulating things and let the markets do what the markets do.
Yeah. And just to wrap up, Guy, how about a quick cell phone? And Chris, you'll be next.
Yeah, for me, 541-944-6987.
And Chris?
541-890-8463.
And how do they get a hold of Proud Ground if they're interested in the affordable housing at New Spirit Village?
The best way is to go to their website, proudground.org. There is a tab that says New Spirit Village. Click on that, and then it shows you the 3 different models that are available now. Click on one of those, and it'll take you to the application.
And
Great. Well, gentlemen, thank you. Oh, go ahead.
yeah, I don't know who the other lenders are on this, but honestly, if it was me and I had a family member doing this, I would have them, just call Chris and ask, go through.
And that's all the time we have, folks. Thank you, Guy and Chris. Have a beautiful Southern Oregon weekend. We'll see you next week.
Thanks, Alice.